moving on to the next query, which is from Anurag, who's from Lucknow. He is holding around 1,500 odd shares of KEC International, bought at 1180 a piece, and he wants to know as to what should be the next target or stop loss for the next 2 to 3 months. Ajit, I'll come to you. KEC International also got an order on Friday in the transmission and distribution segment, which was around 4945 crore, but the stock is kind of seeing beating in today's markets. 2 to 3 months, how are you viewing the stock?
So Mahima, this month has been, damaging for the overall structure for KEC. Means the stock is down roughly around 34%, and almost like 5-6 months of gains has been incurred. And now, but yes, closer to around 770 area is something that I can see as a immediate base or a support, and in case if it fails to hold, then this correction may extend further to 650 levels also. So in my suggestion, he should at least reduce position in case if it breaks this 770 area, and in case of a rebound, I doubt that the stock can witness a sharp recovery. So 850 to 900 is something that the stock might again face resistance. So if his view is short term, he should utilize any recovery in that zone to reduce his position.
Yeah, in fact, KEC International lost quite a considerable amount of its value over the. You were looking at the number.
Yeah, so it's been the top loser in terms of market cap from the small cap segment, and it's lost over 10,908 crore worth of market cap in Jan itself. So 27 days of Jan, and it's already lost around 10,900 crore.
The stock under pressure, despite the fact that it's a sizable order that has been announced today, 1,445 crore order in the transmission and distribution space. So any perception of overvalue is being, as we've pointed out, being very sharply cut down at this stage, and we'll have to see how that tide turns. We've been talking about the fact that sentimentally it's been looking weak, and also we addressed this at the start. Volatility seems to be the name of the game, and you're seeing a very sharp spike in the VIX today as well, and that is really par for the course. Ajit, you want to come in very quickly about how to trade in this kind of a market? Would you be cautious, particularly in a week that's so heavy on not just earnings but global events, and also at the end of the week you have the budget?
Right, Alex. So in fact, Alex, we have been recommending to our clients to just align your position as per the market trend. And when we saw that the broader market started underperforming the benchmark, earlier the trend was otherwise, it was a clear indication that this profit taking may extend. And especially it's a crucial week because we have earnings, we have FOMC meet, the budget is also around the corner. At least for the index, especially if you're holding long position, in the FNO stocks, and by any chance it's a leverage position, definitely maintain some puts. Means 22,800, 700 put is something that is of 6th means expiry, weekly expiry, something that you should add to your portfolio. Another important thing is please do not add to your loss-making position. That is more important because of late, after seeing 10%, 12% kind of an intraday decline in any stock, people tend to get this tendency that it's now cheaper. You should, let's say, add to this position. So these kind of temptation you should definitely avoid and focus on earnings, especially if you are long-term investors. So please don't get carried away with your short-term price fluctuation. If it is aligned with just market correction and without any reason we are seeing correction in stock, definitely you can go ahead and add. But otherwise, avoid catching the falling knife is something that you should, especially in the mid-cap and small-cap space.
Very, very, very important advice being given to you. Please bear this in mind.